Hey everybody, I hope everyone is doing well and had a good day today. And I have time for a quick review today, so in this video I'm going to briefly review the Emini 5-minute chart for Thursday, October 9th, 2025. And just quickly going into the day, if we look at the end of yesterday, it's possible we have an expanding triangle at the end of yesterday. We had a bull trend and the market drifted sideways. So you can break a trend line two ways. You can break it by going down or by going sideways. And in this case, we went more sideways than down. So it's still a trend line break. The market went sideways, breaking this tight bull trend line. And an expanding triangle, as we can see going into the day, with a small gap up. So we're getting higher highs and lower lows. This is range expansion. And it's a trend line break, like I said, after the bull trend. The market is breaking the trend line by going sideways and the range is expanding. So this is a type of possible higher high major trend reversal. So we break the trend line, we test the highs, we go to a higher high, and the bears are hoping we get the major reversal into a bear trend. And the bulls are hopeful that this ultimately is an expanding triangle bull flag, maybe a double bottom bull flag, and we continue to rally. But on the open, with the small gap up, we can assume overnight was sideways because of the small gap. And whenever there's a small gap, I typically just trade with the regular trading hours chart. So we can trade based on the bars we see on this chart alone. And we can see that today is opening and continuing the expanding triangle pattern that we had for the second half of yesterday. So big bear reversal bar for bar 1, reversing down from the top of the expanding triangle, probably going to test at least a little bit lower to the middle of this trading range. You can see the midpoint is not very far below. And we've had a couple legs up, one pullback, two testing resistance. Bulls high 1 buy, but leg 1, leg 2, going for leg 3, high in a trading range. And then you can see nobody bought above bar 2. The traders buying above bar 2 got trapped on bar 3. So bar 3, a big breakout bar. Look at bar 3 compared to all of the bars to the left. And except for maybe bar 7 yesterday, bar 3 is bigger than all of the bars to the left. So this is a big breakout bar. And you know it's trapping traders above. Like I said, the bulls who bought the stop order buy above bar 2, they're trapped into a losing position. The bears who did not sell, they're trapped out of a winning position. And this dynamic of trapped traders, both bulls and bears, are trapped. The bulls are trapped into a losing trade. The bears are trapped out of a winning trade. And this creates a demand for a pullback. Both groups are desperately waiting for a pullback. The bears want to enter on any little bounce so that they can enter at a discount. And the bulls are hopeful that the market pulls back so that they can maybe avoid a loss or take a smaller loss on the trade. But the reality here with bar 3, it's very likely that bar 3 is going to get a second leg down because of the trapped traders. So this is the dynamic that is responsible for creating breakouts in second legs. So bar 4, bull reversal bar. It's a good looking bar, but it's one of those bars that you've heard Al talk about it in the trading course. You know, you cannot simply trade based on candlestick patterns. Bar 4 is a great looking buy signal bar. It's a bull reversal bar closing on its high, but the context is bad for buying. You have a big bear breakout bar reversing down from the top of an expanding triangle. And like I said, possible higher high major trend reversal. And bar 4 is forcing you to buy right at resistance, the moving average. We crossed below it on 3. We're testing it on 4. The odds are there were sellers above 4. And like I said, bar 3, second leg down likely. So this might be the bounce that traders use to sell. The bears use bar 4 to sell as a pullback, and the bulls who bought bar 2 or above bar 2. Maybe they scaled in lower here, maybe even lower. Maybe this breakout point, bar 66 high. The bulls scaling in, probably going to use any little bounce they can get to exit at break even. So imagine bull buys above 2, they buy more at support, like the bar 66 high, somewhere in this area, low in the range. And then the middle, the average entry price is the midpoint between the stop order buy, the high of bar 2, and let's say bar 66 or 67, somewhere in this area, low in the range. That midpoint is the average entry price, the purple line. And the bulls might just be desperate to exit, break even on their entire trade. Bar 3 is big enough for a second leg. We may not get all the way back up to bar 2. So you can see what happened on bar 5. Traders sold above bar 4. Even though it's a good looking bar, it's simply a pullback after the big breakout 3. So another big breakout on 5. Consecutive sell climaxes breaking below the expanding triangle bear channel line. So we'll see what the reaction is here. The majority of bar 5 is not breaking out of the expanding triangle, but it is breaking below and closing below, and that's good for the bears. Will we get a big bar? Will we get a big bull bar on bar 6, and will the trading range continue? Or will the bears get follow-through selling and we continue lower, possibly for a measured move? At this point, 3 and 4, two big consecutive sell climaxes. There's probably room to the downside. The market probably has to test a little bit lower. This might all simply be a breakout. This is a breakout on a higher time frame from 1 to bar 5, and a second leg down is likely. But when you have consecutive sell climaxes like this, or buy climaxes, consecutive sell climaxes, they are unsustainable. And it's unlikely we get a bear trend day, but we probably will get a trading range day, maybe a trending trading range day with a bearish bias or a bearish tone. So the bears fail to get follow through, but the reversal on 6 is weak and we're still below the expanding triangle bear channel line. So weak reversal attempt, bar 7, a couple of dojis after a big breakout bar, another leg down, still likely. So it's a buy signal bar, but it's a bad stop order buy, weak trading range signal bar after bear breakouts with gaps. So probably sellers above. Bad stop order buy means good limit order sell. Low 1 did not trigger. We're setting up an implied low 2, double top, bear flag on 9, probably sellers above, and sell the close. You can see traders selling the close of 9 on bar 10, and then the market continues lower. Getting a new breakout, 9 through 12, probably enough energy here for another leg down. So it might be 1, 2, 3 legs down, but the buying pressure through here is really weak. A couple bars closing on their highs, 2 and 4, but relatively small bar 2. Dojis through here. The bulls only have one decent bar, and that's bar 4. So the buying pressure is weak, probably have to go lower. Bears looking for measured moves, maybe based on the height of bar 5. So here's the first target there, and 13 accelerated to that target. So 3 legs down with acceleration 13 at a measured move target. It's possible we start to find support here, but that doesn't mean you just buy 13. That would be very aggressive to do. It's more likely that this breakout 9 through 13 gets its own second leg. It's possible we get a deeper pullback because, like I said, consecutive sell climaxes, we're getting very far below the moving average. So the only way the bears can justify selling this far below the EMA is if there's sustained momentum. If we start to pause and hesitate, the bears will probably be quick to exit because the stop is far. If you're selling 13, stop above 9, your risk is very big, and you can only justify big risk with high probability. If you have bad risk reward, you need high probability to justify taking the trade, to have a positive trader's equation. And 1 times the risk is down here. So bears continuing to get follow through, 15 getting more overlap. So a warning that we may start to go more sideways here, far below the EMA, and then a big outside up bar on bar 16. Strong enough bar for a second leg. So always in bears, what do? Even if you sold below 15, you probably exit above 16 expecting higher prices, at least in the short term. But big picture, this big breakout down to 15 will probably get a second leg. It's aggressive to buy 16 after so much selling, so many consecutive bear bars, but 16, the reality is 16. It's a big enough reversal that there's probably buyers below, and a second leg up is likely. Breakout points, maybe there's a zone of resistance up here. We broke below the bear channel line, expanding triangle. Bulls had a reversal attempt. We broke below it, so bar 7 low, a low close of 5. All of this area is probably resistance. So big reversal bar with follow through, probably buyers below 17. 18 accelerating again, so breakout, pause, second leg, another pause. Now you're right at the moving average and resistance. So a couple legs up against very tight bear channel, not ideal for buying here. Sellers may start to come back in. The bulls who bought taking their scalp, and the bears recognizing it's 3 consecutive sell climaxes. We may start to pull back here, but even if we get a deep pullback, a second leg down is still likely, and we're testing resistance. So now the market is back in the sell zone. So a high 1 buy, but it's already 1 pause, 2 pause, maybe an attempt at 3 legs up, and again right at resistance. So there actually might be more sellers above bar 20, even though it's a high 1 and a bull spike and a good signal bar like bar 4. Do you really want to buy the first test of the moving average after 20 bars below the EMA in a very tight bear channel? This is still a lower high, and again testing resistance. So again, not ideal for buying here. The bulls, if they're buying, they're probably using a wide stop even below 16, not an ideal stop location, because the reality is that this could be evolving, probably is evolving into a trading range. Big down, big up, big confusion. Bears, they need a second leg down because of the trap traders here, but the bulls will likely get a second leg up or a bounce because of the trap traders down here. So this is also support down here. So we start to get hesitation. The bulls lose momentum. 1, pause, 2, pull back, 3 legs up, testing resistance, and then a big bear breakout, 23. Probably sell the close. And room for at least a 1R measure move down based on at least the bar itself, maybe even the pivot, the reversal point, 22 high. So the market sold off, but now we're testing support. Remember, outside up 16, trapped traders below. Traders selling below 15, sell the close. Sell off, they get trapped on the bull breakout. The bulls get a spike and tight channel, and that traps traders below. So even though we have a 3-bar micro channel for the bears, now we're testing support. So like I said, the bulls will have at least an attempt at a second leg up, and at a minimum will probably bounce here, but hard to buy after 3 strong bear bars. Okay, hesitation on 26, good for the bulls. Maybe buyers below 26 if we get there. Still hard to buy above 26. Not a great stop order signal bar. It's a trading range bar after 3 strong bear bars and a 5-bar micro channel. Still more bearish, but we're probably entering a trading range at this point. Big down, big up. Bears got their second leg. Bulls may attempt to get a second leg here, which they got on 28-29, but testing the breakout point here, 22 low. 22 is a sell reversal bar, so it closed below its midpoint, even though it's a bull body, a white body. Traders buying below 22 clearly got trapped on 23. and that creates resistance. So if the market comes back and tests this low of 22, this horizontal line, you can expect rallies to at least hesitate, if not reverse. So there's the hesitation. And remember, big picture, big sell-off down to 15. This could simply be a big low too, and the bears may get trend resumption. This is enough of big down, big up, and enough buying pressure that the downside is probably limited. Again, probably not a bear trend day, but the bears will still probably get a second leg down and test the low of 16. So you can see the hesitation at resistance and then reversal back down. But again, the process reverses. 28 trapped traders below, 27 high, a bad stop order signal bar, trapping traders who were fading above 27. 28 created a lot of distance and a strong bar, second leg up likely. So 35 testing that support, you can expect at least a bounce. So we bounced, hesitation, bears get a couple legs down to support. Now at this point, we have enough legs that it's breakout mode. You have 3 legs down, 1, 2, 3, 2 legs up, 1, 2, so it's a 5 push pattern, and it's a triangle. We're getting range compression, higher lows, lower highs, markets in breakout mode. The trend direction was down going into this trading range, so you can expect the breakout direction to be higher probability to the downside. But even if we do break to the downside, I said the downside may be limited because of the buying pressure through here. Bull breakout attempt, but right at the moving average, tight bear channel, big outside down bar, bears getting there, bigger second leg, 1, pullback, 2. Big bear bars, 41, 42. What's the probability the market falls for a measured move based on the height of this triangle? The target's all the way down here, so let's see if this breakout has enough energy to get there. You can see we slightly broke out to a new low of the day, but then we hesitated and then went outside up. So we may be finding support. And then you also have the triangle, the apex of the triangle. So triangles are an area of agreement. This purple line is also a magnet, the apex of the triangle, the midpoint of this range. So if we break below, again, the downside may be limited and the market will probably be drawn back to the middle of the range. But strong enough breakout here, second leg down, likely. So bears getting there, second leg. Clean up the chart a little bit. Breaking below the big triangle, the 16 low, but really weak breakout for the bears. Bear breakout, bad follow through, overlapping bars. Maybe it's a spike in channel. And the buying pressure is getting stronger. Consecutive bull bars closing near their highs. But through here, it's another triangle. This time a tight trading range. So legs, maybe 5 or 6 bars. Lots of overlap. Limit order market. Bears hoping we'd get leg 1, pull back. Maybe leg 2, measured move. But instead, we're finding buyers at yesterday's low, the blue line. Tight trading range. Maybe it's a final flag. The market's already in the channel phase through here. And you can expect channels to evolve into trading ranges. So more likely, bear channel, we get the bull breakout. You can think of bear channels as bull flags. Tight trading range continuing. Bulls gaining time control. So not a very strong looking breakout. Bars not closing on their highs, but 4 or 5 consecutive bars with trending lows, crossing the moving average. 69, not a very good sell because of the micro channel. Trap traders below, maybe buyers below, probably buyers below 69, even though it's at the top of this lower range. I said the apex of this upper trading range, the purple line. probably a magnet, so we may have to get back there. Bull breakout strong enough for a second leg. We're testing that magnet on bar 74 and even exceeded that price. We may have came back on 81 to test it again. So area of agreement through here, we tried to break below and failed. The bears got bad follow through and the market reversed back up to this area of agreement at the end of the day. Alright, that's going to be it for today's end of day review. Thanks everybody for watching, and I hope everyone has a good night.